Hey guys, so since we've been so successful on trading gold recently, I wanted to just record an example of a trend-based trade that we had made earlier this week and just walk you through really quickly, what's going through my head when I'm trading this, looking at the chart, how I know when to get in, how I know when to get out. And what I'm going to show you in this video, I promise you're not going to see it anywhere you look in any textbook or any type of retail educational material you can find. It's not going to be there, because those people either don't know it or they refuse to believe it. I don't know which is worse, but basically the premise is that the markets are 100% algorithmically driven. Nothing is random. The market is always looking for a specific target at any given time, and sometimes we're able to trade those trends looking for those targets, and other times we're not able to take advantage of them. So here I've put up on the right side of the screen a screenshot from MetaTrader 5, and that shows that first gold trade there where we got in around 1454 and exited at 1461. Now, from a move that went from 1453 to 1462, we only had a $2 margin of I wouldn't say error, but we only had a $2 margin of PIPS that we could have gotten out of that, in addition to what we already to where we took profit. So we're looking at the 4-hour. Okay. Obviously, gold is in a downtrend. You see I have the TD sequential indicator up. I'll make another video extensively talking about how to use TD sequential, because that's its own thing. It's not just buy the nines, sell the nines. It's not what it is. So if that's what you think TD sequential is, stop. Okay. Do not buy or sell the nines. Now, they can be useful alerts, useful indicators, but not by themselves. Okay, so see gold in the downtrend here. Now we get a bullish 9 for the second time on the 4-hour. Now, we saw here last time, I couldn't tell you if I traded this or not. I honestly don't remember. I don't think so. My MetaTrader history doesn't go back that far, and I'm too lazy to start digging into my account. So I don't think we traded this, but we saw this 9, and typically when a 9 forms a swing low, especially on 4-hour or the daily charts, that's going to create quote-unquote horizontal support, which is not a real thing. So don't sit here and think that horizontal support and resistance is something that you should be thinking about, because it's not. But it does create a level for us to determine a point of control, and typically you will see some kind of bounce when one of those levels is determined. Now, we saw that once, okay, and we came back down here, we got another 9, and immediately we saw the same thing. And it's a very simple pattern. It's a swing low. I know a lot of people talk about swing highs and swing lows, okay, but they, for some reason, just, I don't even want to get into it. This is a swing low, okay? 1, 2, 3. Very easy pattern to find. Anybody can find it. This is a swing high. 1, 2, 3. The middle candle will have a lower low or a higher high than the two next to it. So we have a swing low on the 4-hour, right? Which is giving us a nice bullish bias. This candle finishes the swing low, Now technically, our buy signal technically would have been here. Okay, at 1456 when we traded above this third candle. However, if you know what you're doing, okay, not if you want to gamble, if you know what you're doing and you want to jump ahead of the indicator and you want to get ahead of the trade, you can try stuff like that, but you need to understand that can go against you, because guess what? Before this candle is closed, it doesn't mean anything. This could be a wick. We could make an even lower low. It happens all the time. So personally, I've been trading gold for quite some time, and I know what it looks like when it's reversing. Okay, we got a nice strong reaction on the 4 hour and the 1 hour. The 1 hour is probably my favorite thing to look at as far as market reversals. Okay, see this here? Beautiful. You couldn't ask for a better indicator that the trend is reversing. It's too easy. Buy this right here, 1453, come up here, and you see that where this trend starts, you have the same type of candle inverted over here. Okay, trends do tend to be symmetrical like that, and it's because the market is algorithmic. So, you have our swing low. I entered, come up. Once again, you look on the 1 hour, 4 hour chart, you see this wick. Okay, so clearly that is a rejection, or you don't even necessarily need to call it a rejection, you just call it a reaction. Price is reacting to this level here. Okay, now why are we still in the trade at this point? What are we targeting? We are targeting gold to run the last high from either the last 24 hours or the previous 2 days of price action. Okay, so when we start the trend here on the 25th, we're looking back. You see I have these white dotted lines to designate the last 48 hours of price action. And we're looking to run the last high, and it doesn't, this is where experience comes in. You don't know, like, you don't always know which high could be run. That's just what happens when you have break in market structure. Sometimes things break out, sometimes things break down, sometimes they don't. Sometimes they're very predictable. In this case, gold is behaving very predictably. So we can just target the top of this wick here, that being the high, and typically it'll go a little bit higher. I think I closed this manually. I don't really, yeah, I think I closed it manually. I think our take profit was like 1463, and I think once I saw the wick, I think I closed it at 14, almost 1462. So easy peasy. You have your trend identified, this downtrend, and then you have basically what looks like a retracement, but in the end, as we see over here, ends up being a reversal pattern.